Yes, you read that title correct. In my opinion, it is possible for you to become a profitable forex trader in under 6 months, and in this video I will share with you how. Alright, so let's get right into it. In this video I'm just going to sit down and share with you some tips that would have helped me tremendously when I started trading. It would have saved me a lot of time, a lot of stress, a lot of money as well. So I'm just gonna go ahead and share them all with you. Like I said, these tips are from personal experience. So like I said, if you want to save some time, money, or stress, I think respecting these tips would come in handy. But of course, at the end of the day, it's all your decision. Now, I want to start off by telling you that in my opinion, you should trade the first 3 to 4 months only on a demo. I know this is super hard because guess what? I personally breached that rule as well. But again, if you were to respect these rules, I really think that you have a chance to become profitable in under 6 months. Like I said, trading on a demo the first 3 to 4 months is, in my opinion, very, very important. Another important tip that I will give you guys is, especially in the beginning, stick to only one strategy. Because jumping from one strategy to another will not bring you anywhere. Okay, I know how it is. You jump from one course, then you go ahead, you buy another one, then you go ahead, you buy another indicator, then you go ahead and you buy that course, you buy that book, this, that, and you then try to mix them all and it doesn't work. And then you try to look for something else and it becomes like a vicious circle that you cannot get out of. I know how that feels. I've been there, okay? So in my opinion, in the beginning, try to stick to only one strategy. Ask yourself, you want to be a day trader, a swing trader, a scalper, depending on your schedule. After that, try to learn a strategy, a basic strategy that gives you an edge on the market, because that's all you need, an edge on the market. And after that, just stick to it, okay? Don't try to switch your strategy. Just stick to it, and that's it, okay? The third tip is to stop watching social media, because this is going to make you want to risk more, want to FOMO into trades. Because me in the beginning, I was watching all these traders online, on Instagram, on YouTube, making a lot of profits, buying cars, mentioned this, that, and I was feeling bad about it. I was feeling bad, and guess what I was doing? Because of that, I was trying to be more aggressive. I was trying to make things happen faster that they should have happened. And because of that, I was blowing accounts. I blew a lot of accounts, a lot of savings. I wasted a lot of time doing that. And trust me, it's not funny. And you stopping giving social media attention will help you with that. Because essentially, if you're not seeing what others are doing, it's a lot better for you. Because then if you look at someone and you see that they made a 10K day today, then you will be like, oh, well, I made nothing today. Maybe tomorrow I should risk more. Maybe I should change my strategy. Doubt start to show up, and it's not a sweet place to be in. So try to limit social media as much as you can, especially forex related social media. Of course, you can go ahead and watch what your mates are doing if they're not trading and whatnot. I'm not saying that you shouldn't go ahead and browse through social media at all. But when it comes to Forex, it will be great for you to just stop watching it, because at the end of the day, it's not going to help you with nothing. It's not going to help you at all becoming a better trader, okay? Just because you saw someone made huge profits today, that won't help you at all. It will just make you feel a bit bad about yourself, that you couldn't make it. And guess what happens next? You then will be tempted to do some of the things that we've discussed. That, of course, are mistakes that will then make you lose more time, more, and of course more money as well, in my opinion. All right. The fourth tip I will give you guys is to understand risk management and probabilities. This, in my opinion, is a lot more important than the strategy part. Okay, because like I said, there's tons and tons of strategies that have a proven edge on the market that will give you a edge that you can trade on and consistently grow over time. Okay, because essentially, no matter if you're a SMC trader or a retail trader or you trade with indicators, we are essentially doing the same thing. Okay, we are choosing strategies that gives us a small edge on the market, And after that, to sustain that edge, we have to come with a good risk management plan. Okay? There's no holy grail strategy. That's something that I also wish I knew earlier, because I thought that once I will find the holy grail strategy, I will stop losing, I will only have winning trades, and that's not the case. Okay? You will have losers with any strategy in this world. There's no perfect strategy in this world, and there will never be one. So as soon as you understand that trading is a game of probabilities, okay, that you don't have any control over, but to just stick to your edge, stick to your strategy that you know you've backtested and overall has a X amount of win rate, X percentage of win rate, you know, and all the other details that you need to know about the strategy, and then just go ahead and come with a strict risk management plan. Because like I said, this is a lot more important than the strategy part. There's so many people, trust me, I know people that trade super basic strategies like support and resistance, and they are consistently profitable with them. What do I mean by that? They are, over the long term, over months, they are consistently profitable. Yes, they might have a losing day, they might have a losing week, they even might have a slower month, but overall they are consistently profitable. Why? Because they understand that trading is a probability game, and they don't focus on searching for a better strategy, because there's no better strategy. Okay, it's the easiest thing to do to blame a strategy and then go ahead and search for another one. I'm not saying that, of course, if you are using a bad strategy that has no proven success, then of course you should look for another one. But if you know you have a strategy that you backtested, okay, you backtested and you saw it works over a long period of time, it works, it has an edge on the market, then you shouldn't switch it. You know, you should just stick to it, focus on risk management, and that's it. Understand that it is a probability game. Understand that losers are always and will always be part of the game, and then just move forward. Okay, there's no way around it. Now, the fifth or sixth tip, I think, I lost count, but doesn't matter, is to start on a small account and invest money that you're not afraid to lose. Because again, this was a mistake I did as well. I was depositing too much, I was buying too many challenges, and because of that, I was getting stressed out. And guess what happened? I was then doing mistakes, and eventually all these accounts were blown. Okay, so start conservatively. Start small. Start on a small account that won't give you headaches if you lose it. Okay? Trust me, it's a lot better this way. Then, of course, you gotta be very strict with your trading schedule. Okay? You gotta keep it super simple. You gotta have a super strict and simple trading schedule, and don't FOMO into trades. Okay? I see so many people FOMOing into trades. I was part of that group as well. I was trying to trade as much as possible, thinking that if I spend a lot more time on the charts, I would become a better trader. But that's literally the opposite when it comes to trading. And I know it's super normal for us to think like that, because we're humans. We think if we play the piano 10 hours a day, then of course we will play the piano better than someone that plays it only for 3 hours a day. And that's totally perfect. Okay, that's very, very true. But in trading, that's actually not the case. If you spend 10 hours a day on the chart, that doesn't mean that you will be more profitable than someone that literally spends 10 minutes on charts. Okay? That doesn't mean that. In my opinion, you're more exposed to risk if you actually spend that much time on charts. Even if you're a scalper, okay? I know scalpers like that trade really good, that are profitable, and guess what? They trade for like 20 to 25 minutes every single day. During the New York session, when the New York Stock Exchange opens, they just pick up some scalps when the volatility kicks in the market, and that's it for them. That's it for the day, you know? So try to understand this as well, because again, this was something that I didn't understand. And of course, it is normal knowing that we think that if we invest a lot of time into something, we will get a better reward. And I'm not saying, especially in the learning phase, it's good for you to invest time in trying to learn market structure, how the markets work, how to calculate risk, how to do this, to do that, the basics, you know, that's super important. I'm not saying to not do that. But then once you have the foundation, the pillars, there's not much you can do about it anymore, you know? Just to apply a proper risk and stick to it. And that's it. Trading isn't that hard, you know, if you think of it. But we tend to make it super hard, you know? And lastly, of course, this is pretty much what I just discussed about. Try to spend a low amount of time on the charts. Okay, limit chart exposure because it won't bring you any benefits. Okay, trust me, trading isn't about spending 8 hours a day in front of the charts and making huge profits. Trading is about having a strict plan, a solid system, a proven strategy that gives you an edge on the market. Like I said, it can be whatever strategy you want. There's so many out there to choose from. And then just rinse and repeat every single day, keeping it super simple, rinse and repeat. In my opinion, I personally think that nobody should be spending more than 1 hour a day when it comes to personal trading. Okay? No matter if you trade a prop firm account, if you trade your own personal account, I don't think you should be spending more than 1 hour a day in front of the charts. That's just my personal opinion. Okay? There's people that spend less than that, like 10, 15 minutes. I would say that's the average for a profitable trader. Okay? Even, like I said, even if you're a scalper, yes, I understand you have to sit on the 1 minute. But like I said, I know scalpers that have a fixed schedule, and at the New York Stock Exchange, that's when they look for setups. They look for setups for probably 15 to 20 minutes, then they place the orders, and then that's it. Again, if you're a swing trader, okay, you place your orders possibly at the beginning of the week, and then throughout the week, every now and then you just watch the charts to see where the market is at. And that's all the work you do. And then you place some more orders, or you delete them, or you close them. Again, if you're a day trader, you just place orders knowing that you trade between, let's say, 2 and 6 p.m. UK time, because that's pretty much when the volatility kicks in during New York session. You know, that's your period of time. At 2 p.m., you look for setups, you place them. And then at 6 p.m., you just go ahead and look what happened, and that's it. But you don't have to spend all that time in front of the charts whilst the setups are pending or playing out, you know? So yeah, I'm just gonna end this video right here. This was my final tip that I had to give you. Of course, feel free to go ahead and join my free Telegram group. The link is down below. That's where I send out trades every single day, so feel free to go ahead and join it. Also, if there's any questions, please let them down below. I'll make sure to check them out. And as always, till next week, I want to wish you all a lovely day ahead, a lovely week, and take care.